So we'll just get things started. Again, welcome everybody. Thank you for joining us for this exciting improvement to our office hours. As I mentioned before, we'll be going through the CRB, Copyright Royalty Board, what they are, what they do, and the big news over the summer about the confirmed royalty rate increase for streaming mechanical royalties. With me, as always, is Dayton O'Connor, our lead analyst, and Rob Bernhardt, our corporate counsel. My name is John Gessel. I'm our client relations coordinator here. So without further ado, we will get started. So let's start with, what is the CRB? Rob, can you help us with that? Rob, you're still muted.
Appreciate that. All right, so it's important to understand the context of what we're talking about today and kind of get the bigger picture before we drill down into how this actually affects a royalty stream itself. So you may have heard some news this summer about the CRB. It's the Copyright Royalty Board. It's a panel set up within the Library of Congress, and really their job is to handle a lot of different statutory licenses for many different types of royalties, but we're going to specifically talk about the music royalties. And the statutory license is for mechanical royalties, and really what that does is allow you to get a blanket license for any type of music that you want to use if you're going to create a sound recording without obtaining a separate license from each copyright owner. So the Copyright Royalty Board's jurisdiction really, as far as music goes, only covers mechanical royalties. So those are sales and streaming of musical composition. So that's the underlying lyrics and melody of a song. Those are paid to the songwriters and publishers. It only affects US-based revenue, and they do not have jurisdiction over public performance royalties. So when we're talking about rising rates and everything like that, they do not apply to anything that you'll see on the website for BMI, ASCAP, things like that. We're really only talking about mechanical royalties. So now let's put it a little more in perspective about which royalty rights are covered. So we've got for streaming and digital streaming and sales, you'll see that digital sales should actually be up on the top there. But the way that works is when you have a stream or a sale of a digital piece of music, we'll talk about this organization in a minute, but it'll go to the Mechanical Licensing Collective, the MLC. So the digital service providers are required to pay a portion of their revenue, and in the US that will go to the MLC. Then the MLC pays the music publishers, and then the money flows to the songwriters. If we're still talking about physical sales of something like a CD or vinyl or anything that's not digital, that will flow from the seller of that physical media. Then it'll go to the record label, and then the record label is responsible for paying the publisher, who then goes on to pay the songwriter. So the big thing to keep in mind is that we're still talking musical composition, and we're only talking about publishing assets if we're putting into a royalty exchange context. So if you see royalty streams that are paid by Sony, Universal, Warner Chappell, Atman MP, BMG, those kind of assets that you'll see, that's what we're talking about for the new Copyright Royalty Board rates. I think that'll do it for this slide. So now we move on to who are the actual folks that argue in front of the Copyright Royalty Board. And not surprisingly, it's the folks that are impacted by the rates that are set. So in the US, we've got the National Music Publishers Association in concert with the Songwriters Association. And then there's the Digital Media Association. They represent the service providers. So those are the folks that every time the Copyright Royalty Board has a hearing, they'll all submit proposals. The board will hear arguments, and a lot of times they'll hear arguments from many different parties outside of just these folks, individual stakeholders, third parties that have an interest in these rates. But these are the folks that are involved in these rate setting hearings. So with all that in mind, let's talk about the news that happened this summer with the change in the rates. So to kind of take a step back, the way that the CRB titles these hearings is the phono records, and the second phono records covered a period from 2013 to 2017. So they set the all-in rate, which the all-in rate you'll also hear is the headline rate. What that is that's the total amount of revenue in the US that the service providers have to pay the songwriters and publishers. So there's several different calculations that go into it, but it's basically take all of the service revenue, apply that headline rate, pull out what is going to be paid for public performance royalties, and then you're left with what happens to the streaming mechanicals. So kind of keep that in context as well as we go forward with analyzing the specific asset. So the rate for 2013 through 2017, the headline rate was 10.5%. So leading into Phonorecords 3, it was a pretty hotly contested issue. In 2018, the CRB came down with a ruling, said that the rates would increase over a period of 5 years from 2018 to 2022, ending at 15.1% of revenues. The DSPs appealed. They battled on several different issues, and then finally this summer, the CRB came back and affirmed that those rates would be in effect. So what happened during Phonorecords 3, during the argument, once the DSPs appealed that ruling, they continued to pay at the Phonorecords 2 rates. So as a part of the ruling, the CRB said that they're going to have these digital service providers are going to have to go back and pay at those the settled on rates for Phonorecords 3, meaning there's going to be some catch-up payments coming. Right when the decision came out, the DSPs asked for more time to calculate and make those payments. And that's one kind of thing that's up in the air right now, is when are these payments going to happen? How are they going to be made? Is it going to be one lump sum? And that's something that we don't know right now. But shortly after Phonorecords 3 was finally decided, leading up to it, everyone was kind of worried, like, here we go, we're going to end this Phonorecords 3, and there's going to be a big fight about Phono 4. But really, like a month later, the DSPs and the publishers and songwriters actually released an announcement that they had settled that those rates for Phonorecords 4, which would be covered from 23 to 27. And those rates are going to go from 15.1 up to 15.35 over a period of 5 years, gradually increased. The physical and download rates will go up as well. There's some other calculations into subscriber counts, the ways that they actually come up with that US revenue number that they agreed on. There's still needs to be posted with the CRB. They'll have public comment, and then the CRB must approve that settlement before it actually goes into effect. I think most folks think that that is mostly a formality, but I think we'll see that if not later this year, then first next year. So this is kind of the landscape of where we sit with these CRB rates. Now let's talk about the new entity that's responsible for collecting and paying the royalties due from these rates. And that's a company set up by the DMCA, is established in 2018, but they finally went into operations in January of last year. It's called the Mechanical Licensing Collective. It's the MLC, and their really whole job is to collect the digital mechanical royalties, pay them to songwriters and publishers. It's really another important task is they tie compositions to actual sound recordings out there, on the digital platforms, so that when this specific recording is streamed, that these are the publishers and songwriters that are going to be paid. So they have a publicly available database that's available on vmlc.com that anyone can go and do a search for a song, songwriter, publisher, look at the catalog, look at the interested players. So a lot more information is out there on who actually wrote and owns the composition part of these songs. The MLC really kind of mirrors a lot of the foreign societies that have over probably the last dozen or 20 years have kind of taken this responsibility on. So it's kind of putting us in more step with other societies around the world. They collect and pay royalties monthly to the publishers, and then the publishers are then responsible for paying their songwriters. I think that covers the MLC part. I think we'll get into more details on how these royalties actually flow and what it looks like for a specific asset. But that does it for my piece.
Okay, awesome. Well, thanks for that, Rob. So hopefully now we all have a good grasp of how these changes are happening and kind of what that looks like. So for the next piece here, we took a look at an asset that has transacted on Royalty Exchange that was heavily geared towards streaming mechanical royalties. So this asset transacted in 2021, August 2021. So this is just a basic look at the earnings for this asset. We separated the streaming mechanical from the total contribution of other earnings, just so we can get a nice picture of what we're looking at. So at the time of sale for this asset in particular, all that was available for information was up until second half of 2020. So those last 3 bars there were not actually available at time of sale. Now the multiple paid for this $300,000 asset was 11.25. So pretty solid multiple for a life of rights asset. But when we extrapolate the impact of these increased earnings to a catalog like this, we get something that looks like this. So as you can see, we've added in the new rate increase. It's a gradual increase based on the expectation of payouts from the rate increase. So that brings the effective LTM for this asset up quite a bit, up to about 43,000. So an adjusted multiple of about a 6.9%, assuming that these payouts continue further. Looking at this another way, we can see the increase is pretty substantial. Dayton, can you talk to us a little bit about this chart, what we're looking at, and what this means?
Sure. This is another illustration of the change in earnings over time that we may expect to see for this particular asset, given this uplift in the change from the Phono 2 interim rates to the Phono 3 locked in all-in headline rates. So the blue line is the historic distributions that were paid out over time for this asset. That orange bar at the top, that represents what the value of those royalties would have been had those Phono 3 rates not been appealed and been locked in from the start of the effective period. So from the beginning of 2018 and through first half 2022, which is the most recent statement that we have available for this particular asset. And that yellow line illustrates the difference in the value of those earnings over time. So you can see it is rising from the first half 2018. It's like an approximate increase of about 2% when you bake in these increased rates for the streaming mechanicals for the total royalty. So that's domestic and international, including all sources, on top of the mechanical streaming, up to the 2022 period, when you see those rates jump from the 10.5% interim rate that was getting paid out on to that final 15.1% rate. That might be the rate we'd see if you go online, and if you do some research into CRBs, you'll see articles referencing a 44% increase. That's what it's referring to, that jump from the 10.5 to the 15.1. And in this particular catalog, that gets realized as a 20% increase in the value of those distributions by the time that final year of the Phono 3 period is locked in.
Cool. Now, there are a couple assumptions that we had to make this projection, and that's the payout schedule of the increase. As Rob mentioned earlier, we don't really know how that's going to get paid out, whether it's a lump sum catch-up payment or a gradual increase, something like this. But it paints a nice picture of what the increase could look like and the changes that it will have for the various periods of payment. So we did a little bit of a more formal projection in this next slide here. So this is for the 15.1% all-in rate, which is the Phono 3 ruling, not to be confused with the Phono 4 effective proposal at 15.35%. So a little bit different there. So Dayton, can you talk to us about this projection?
Yeah, I mean, see, to the point that you were touching on, John, we don't know when these new rates are going to be paid through by way of retroactive adjustments. So post ruling on the finalized Phono 3 rates, the DSPs went to the judicial panel and let them know that they needed more time to secure the funds to make these payments. So Unclear if this is going to get paid through in 2023 as some kind of lump sum payment for the 5-year look back, or if it gets paid through in installments, quarterly, semi-annual. With this forecast, we're assuming a pretty conservative, like 3-year period approximately, that these royalties would get paid through for that 5-year period for the Phono 3, on top of the new rates that will be reflected in the catalog effective with the beginning of the 2023 period that we have in here. And just to illustrate what we're seeing in here, the dark gray section is the historic earnings that we had on hand at the time that we did this forecast. That light gray at the bottom, that is the forecast, assuming that the Phono 2 rates would have been held in place had the DSPs triumphed in their appeal, or had the Phono 3 not increased from that Phono 2 rate, locking it in at that 10.5% all-in headline rate. Versus that orange bar at the top, you see that's the effect of the Phono 3 rates, as well as the retroactive adjustment that will get paid through at some point in the future to address the past 5 years of the underpaid rates on Phono 2.
And then, of course, full disclaimer, this is a theoretical projection. We cannot make any claims, guarantees, or predictions to the future performance of royalty assets. And since we're talking about royalties derived from streaming revenue, the actual earnings can vary depending on how the catalog streams moving forward. So, a little bit of a grain of salt to take in. But again, this paints a nice picture of the size and scope of the increase that you could see from a heavy streaming mechanical catalog, just in the catch-up rates. Okay, so I think that really covers the quick analysis that we wanted to do just to kind of illustrate these changes. There's a lot to take away from this. First and foremost, the big takeaway is that the royalty payout for streaming mechanicals is set to increase. It's all but locked in with the CRB3 Phono 3 decision over the summer. The big questions are when is this going to start paying out, and what is that payout going to look like? Of course, there's still the possibility that the rates could adjust depending on what the CRB does moving forward. So, another thing to keep in mind is that this could keep evolving. And how the DSPs finally pay it out, yeah, that's the other big question. So with those takeaways in mind, we can get on to our questions. We have a lot of questions submitted and both live. If any of you have questions, now's a great time. We'll start with the live questions and then get into a little bit of the submitted questions. There's about 60 of them, so we can get to them pretty quickly. First one here is, will sound recording royalties decrease due to the increase in payments to songwriters? That's a good question.
That's an interesting question. So the sound recording, the labels have their private agreements with the DSP, so we don't know what their rates are. The CRB doesn't have any jurisdiction over what sound recording owners get paid for their rates. You could maybe think that if more money is going to the songwriters and publishers, that the DSPs would push back on the sound recording owners, but that's not necessarily true. It may be more of it is coming out of the DSP's pocket. I don't know that we'll ever know it, because those are private deals the numbers are not made public.
Okay, awesome. Next one here is, on streaming, what is the typical lag time of payment from consumption to the rights holder being paid?
And Dayton, maybe you've seen more of this in the statements, but the way I understand it is the MLC collects the data every month, and I think they pay maybe in the month or two following the actual consumption. And that money goes to the publishers. So if you own a asset that is paid by a publisher, then that money sits with the publisher until their period payment happens, which could be quarterly, could be twice a year. So it could vary depending on the publisher. But typically, the MLC will pay out monthly, and I think it's 2 months in arrears
That
before
sounds
it
right.
actually gets to the publishers.
Yeah, I think that that's largely a function of the source that those royalties are coming through, what their distribution schedule looks like.
Awesome. Next one here. How, with numbers of streaming growing, does the price of streaming go up? Or is the price of streaming going up? Sorry, Tamira, if I didn't quite capture your question there. How, with the numbers of streaming growing, is the price of streaming going to go up? Not certain how to answer that. I think you're asking, with the payouts increasing, is the price of streaming catalogs, price per stream? I'm not sure how to answer that. I would say, I guess it's because of just the adjustments to the music royalty allocation space and what we've been talking about with the CRB. I'm not sure.
Yeah, I think it's kind of hard to put that in context. So there's no real price per stream. It's all based on how the entire royalty pool is calculated. So as we talked about, we saw the all-in rate, and again, we're just talking about stream mechanicals here. So if you have the all-in rate, then you subtract out the public performance piece of it, then you have the pool that is going to be paid to the publishers. And that pool, how you determine where that money is going to flow is based on the number of plays of a certain recording. So it'll kind of change over time. And as consumption goes up, the price per stream, theoretically would go down. If there's more, if the pool's higher, if there's a larger pool to change from, then the price per stream could go up. So it's really kind of hard to put that in context because we're talking about a pool and there's no actual price per stream that
Right.
is really
Well,
settled.
Well, if we're talking about just like number of streams versus revenue for these services, right? Then yeah, I can see Tamir, I think, added in a comment that like the price per stream constantly going down. I mean, that's a function of those prices being held largely in place for a lot of these DSPs for many, many years now. I think if you do some research, you'll see that there's been some chatter about what does it mean like in the future, especially in like the face of inflation, are those DSPs going to hold those prices in place? And there may be some signs in the industry that Spotify, Apple Music may be preparing to do some kind of price increase. And if there's a price increase and the listenership holds steady, that means there's going to be more revenue collected by those streaming services, which means it's going to translate to a larger pool of royalties against like the same number of plays. That would mean the price per stream is going up. Like I think on that function that the investor is speaking to. But obviously, we can't predict the future, what's going to happen with these services. So,
Right.
All that remains to be seen.
I think one thing we can look to is the regular Goldman Sachs analysis on the music space and the constant increase in streaming access and revenue, just the growth of DSPs generally. I think that's a good thing to look to as well. So Tamir, I hope that answers your question. Next one here is from Corey. Does the decision imply anything in terms of bargaining power for public performance royalties? Do they ever get negotiated? It's a good question because they are impacted a little bit, as I understand it, right, Rob?
Yeah, sorry, I was in the middle of taking a sip. Yeah, so the public performance royalties are negotiated by in the US, ASCAP, BMI, CSAC, GMR, those kind of companies. One thing that we have been kind of assuming is that those rates are roughly going to remain a constant because as we discussed, part of the calculation for digital mechanicals is that those performance royalties get subtracted out of the all-in rate before you determine the pool. So yeah, the U.S. societies are governed by the Department of Justice under consent decrees. So the way that their rates are negotiated and structured and handled is a little bit different here. I think they probably are working in concert with publishers and songwriters to determine what their all-in rate is going to be, and how much these performance royalties are going to play into the total pie. It's a tough question. I don't really know what their bargaining power is or how it changes here, but it is an interesting question.
Next one here from Nicole. Hasn't Apple Music already increased their pricing? Likely. I wouldn't be surprised to hear that. I mean, I know Spotify's been playing with their membership rates. Same with obviously Amazon and any other DSP. So probably, I don't know specifically, Rob, Dayton, if you guys do, but next one here from Eric. Is there any assurance that principal can be recovered if royalties for an asset end up dropping over a number of years? On royalty exchange, no, that's not something that we can guarantee. Yeah, we don't make any claims or guarantees to the future performance of royalty assets. But the resale market and liquidity for these is pretty doable through the market. So if you wanted to resell, you always could. There's stuff sells pretty easily.
Yeah,
so you could always recoup that way.
To add on to that is the way that the royalty sales are structured on royalty exchanges. They're not loans. There's no you're not securitizing anything with collateral or anything like that. You're really looking at the past projections, determining what you think the future income looks like, and then what that's worth to you. So there's no loan type aspects to a royalty sale.
Cool. And another one from Corey here. How does the UK/EU regulatory framework compare to the US? Do we have mandatory increases outside of the US? That's a good question.
Yeah, so it's similar. I think, what did I see? They kind of have a similar structure with a headline rate. Sorry, I don't remember exactly what they call it. And I think it was somewhere around 9%, if I'm remembering correctly from what I was reading. But it's the structure now is similar, because they talk about total revenue and then dispersing that amongst the publishers and songwriters in very similar ways.
Mm-hmm. Do you happen to know, does that set to increase along with the CRB rate increases? I mean, I assume that 9% is supposed to be comparable to the 10% of the Phono 2.
But yeah, so CRB only has jurisdiction over US based revenue.
Right?
Yeah, and honestly, I don't know how often the euro rates are updated or changed. Definitely worth looking into.
Okay, yeah, we can investigate, Corey, and let you know with a bit more certainty. But I mean, historically, a lot of that music industry stuff has been pretty uniform globally, so I wouldn't be surprised if that went up in other places. But we'll find out. We can definitely find out. Okay, any other live questions for those of you attending? If not, we can move on to the submitted questions. There's a bunch of good ones and a couple of basic ones. So we'll just start running through those. If other questions come up while we're going through this, feel free to throw them into the Q&A. We'll just keep moving here. Okay, so first one we got here. How are future royalty estimates predicated, and how accurate are the estimates? So we don't do projections. This is really just a special thing that we did for this analysis because we have some projection data that we can use. But we don't make projections or guarantees or claims to future performance of royalty assets. You can do a little bit as far as decay rates and kind of understanding that using the dollar age and various metrics on royalty exchange, but we don't do estimates. Are there effective strategies for maximizing royalty potential once a deal is concluded? This is a good question that we get pretty often. Since you're not buying actual copyrights or creative control or licensing control, you're pretty limited in what you can do post-transaction. Now, that being said, I have heard lots of creative ideas from different investors about ways they might be able to help boost the earnings, things like building playlists, stuff like that. So not to say there is no way, But we don't have any strategies we can recommend. It's really just up to you and your own creativity. How often are royalties paid? Depends on the royalty payor. Most common payment structures are quarterly, but some are biannually, some annually, etc. How often does the CRB change royalty rates? I believe we touched on that earlier in this presentation here. It's every 5 years. They reanalyze and look at everything. Ra, that's right, every 5 years.
Yep.
Next one here. How long has royalty exchange been around? Generally since what, 2012, Rob?
No, the original company was started in 2013, and our current ownership group purchased it in 2015, and then we launched in earnest in 2016.
Cool. Next one here. Where could you find the exact breakdown ownership percentage of royalty interests? We don't publish that on Royalty Exchange. A lot of that stuff is actually black box, so not sure that you could divine that. So I'm not aware of any place that you could go. Dayton, Rob,
the MLC is getting better. If you go to themlc.com, their database, they're building out the database that shows. In a lot of cases, they'll have 100% of the interest represented, and it'll show the songwriters. A lot of times it'll show their percentages, which publisher they're represented by. And this is, again, just on the composition side. But that is currently the best place to get more granular detail on who owns what percentage of a composition.
Okay, cool. And I do see that there's a few more submitted questions here, which we'll answer quickly. First one, can you share more about the secondary market trading, the prices and ease of selling there? Sure. Share more about the secondary market. I mean, it's part of the overall general exchange. Really ways to tell about secondary listings if there's a transaction history. As far as prices and ease of selling there, we see a lot of strategies and different approaches for different rights holders. Some people, their plan is to buy and hold stuff, and so they have no interest in selling. We relist stuff on behalf of investors so that they have liquidity options, but you're not obligated to sell. So you may find assets that are not actively for sale there. But as far as ease of selling, if you wanted to sell, it's pretty easy. So the market automatically filters by activity. So if you're responding to offers, setting a list price for your catalog, it's going to get bumped near the top of the list automatically. And then, of course, if you really wanted to aggressively approach a sale, we can always feature the catalog, do some marketing around it for you, and draw attention to it. But ultimately, the ease of sale is up to you and what you're comfortable walking away with. The prices you get, and the negotiations that you can have for the counter offers. So hopefully that answers your question there. Next one, Corey, DMCS is in the UK. 721 referred to Competition and Markets Authority recommendation for a full reset. Okay. So for those of you who may have just joined, that's in reference to Corey's earlier questions about UK and EU streaming mechanical rates that might be parallel or similar to the CRB in the US. So we'll do some more investigation on that. Next one here, apologies, you've already answered this, but how do you come to the analyst benchmark number? So the analyst benchmark is effectively a median sale price of similar catalogs that are transacted. So there should be an info blurb for the analyst benchmark there, which you can read about. It's got a little bit fuller of an explanation, but that's effectively what it is. It's a median sale price of similar catalogs with similar dollar age cohort, similar pricing structure, things like that. Next one here. For a royalty newcomer, do 10-year right assets hold any value at expiration? Well, at expiration, those rights automatically revert back to the original seller. Now, the 10-year rights can be nice because normally you can get a lower multiple for the catalog. So it's a little bit of a shorter returns window, but a bit easier to predict because you have a firm endpoint. So if they hold value at expiration, I'm not sure any more or less value than at inception. I don't know, Dayton, Rob, do you guys have anything that you want to add to that?
Well, I mean, I think the direct answer is once that 10 years is up, they hold no value. They automatically revert back to the
Right.
seller.
Simply put, yeah. So, I mean, I guess, yeah, value is that, you know, it's a finite end, but beyond that, there's no tangible value. Next one here. Do you have any update on royalty exchange secondary rights transactions market share? Well, that's a good question. I'm not sure if I have that handy. Robert, Dayton, do you guys happen to know off the top of your heads? What's the market share of secondary transactions versus direct sales?
Not offhand. Rob?
I don't know.
No, if the question is what percentage of transactions on the whole royalty exchange marketplace, how much of that is secondary market? I think that's maybe what the question is.
Yeah,
No, I don't know that.
I would guess, Corey, that it actually fluctuates month to month, maybe even week to week. We could probably look at it on an annual basis and see.
Oh, sorry, John. He's asking royalty exchanges versus peers.
Oh, that's an even better question. I mean, I'm not sure any royalty exchange competitors have much of a market share, to be honest with you. I mean, there's a handful of markets out there, but they have pretty different structures from how royalty exchange works. That's companies like Songvest, but they do securitized interests.
If we're just talking secondary rights, I mean, are we the only marketplace that allows a secondary market for these things? If we're not, I'm not aware of any major players that do that.
I'm not certain. Maybe some of those other securitized one like platforms might do it, but yeah, not many. Next one here. My accountant asks if ownership of rights is a security or a commodity for a U.S. person. What is it? So they are simple assets. They're not a security or a commodity. Well, actually, I'm not certain if they would qualify as a commodity, but I don't believe so. Rob, can you speak to that in a little bit more clarity?
Yeah, no, we don't determine them as a security or commodity. It's really just a one-to-one sale of an asset, of an income asset, contractual right.
Okay, and then another one here. Is there a reason somebody would buy a non-forecastable royalty asset versus an income-paying real estate asset, which is more able to be forecasted? I would say there's lots of reasons. First and foremost is that real estate needs to be managed, like upheld and maintained. So there's a lot of effective costs that goes into that, which can inherently be unpredictable. Whereas royalties are passive. It's true passive income. There's nothing that you have to do post-purchase to supplement or increase the income. It just happens automatically. Other major difference is that, you know, tangibility versus intangibility makes it a little bit trickier. And it's not that these royalty assets are non-forecastable. We just as a market do not provide forecasts because we can't make claims or guarantees to how things will perform in the future. Now, we do have metrics on the site that can help you determine how consistent a catalog might pay out, where it's having traction and success. So you'll probably want to look at a lot of our investor guides. But as far as reasons, passive cash flow and diversification. Royalty assets are pretty uncorrelated to any kind of traditional market, whereas real estate is not. So the uncorrelated aspect is another big one. People just trying to hedge against volatile market trends, things like that. Dayton or Rob, anything you guys want to add to that?
Nope.
You nailed
it. Do rights tend to trade between individuals? For example, are you formalizing the informal market? How are rights owners / artists coming to you? Another good question. Well, rights owners and artists come to us because we're the biggest market for royalties. So if they want to sell, we're normally a good place to go. A lot of our business is word of mouth referrals. So, you know, people have success on royalty exchange. They tell their friends, more artists come to us. It's one of the reasons why you may see several catalogs that have similar rights or shares included, because it might be co-workers or co-writers who've worked on similar projects. For the first half of your question, do rights tend to trade between individuals? Do you mean like the specific royalty rights? If I assume you are,
Probably just private transactions, right? You know, yeah, those have happened. Those have happened for years and years and years. And I think to directly answer the question, we're definitely trying to formalize the informal markets. A lot of these things happened prior to royalty exchange happened. They were, you know, backroom deals negotiated by a couple attorneys, brokers, you know, and over the last few years, you've seen a lot of big public deals, and there's, you know, private funds that are getting into the game. You know, those are still essentially private transactions. We are just a public marketplace that gives the transparency that, hey, here's the assets that are available, you know, and showing everyone what the market thinks that they're worth.
Right, great. A follow-up from Tal here. Isn't an income asset a security by definition? Do you guys have an SEC approval? You did speak about that a few years ago. Rob?
Yeah, no, they're not securities by definition. You know, there's some tests that the Supreme Court came up with called the Howey test on certain types of assets, and we've gotten opinions from a few securities counsels saying that, you know, a one-to-one royalty sale, if there's one seller and one buyer, it's a private arm's length transaction, almost certainly is not considered a security.
Cool. Next one here, is artists/rights owners awareness of royalty exchange rising materially? I would say unequivocally yes. How are hedge funds, historical owners of rights, other investors using royalty exchange? So that's an interesting question, because a lot of hedge funds and financial institutions are looking for a big spend. So, you know, tens to hundreds of millions of dollars for a catalog. But we do see plenty of funds that purchase on the site, especially when we get bigger, higher profile stuff like Listerine royalties that I'm sure you've seen, or like the Shrek one that sold for a couple $1 million. So when we get stuff in that higher price bracket, that's where we typically see the funds come in. And there are plenty. Yeah, but I think that answers.
And
both.
well, and we also have had major music industry companies participate on royalty exchange as you know, on both sides of our transactions. So yeah, I think the awareness of royalty exchange is pretty well determined by this point.
Yeah, and I'd say growing regularly too. I feel like every week we get an artist, a big name artist reaches out and says, hey, I just learned about you guys, I'm really interested. Things like that. So yeah, definitely growing. Is it the case that artists may want to sell off an asset which they think has a weakening revenue stream? How can one protect against this risk? That certainly can and does happen. More often than not, though, I would say an artist doesn't really have a good understanding of if their royalty revenue may be weakening. Some might, but I would say that most don't. As far as protecting against this risk, that's where things like dollar age, understanding the source earnings of a catalog, understanding who is selling, as far as, and by that I mean like is this a songwriter share or a producer share or what? So having a full picture of an asset can kind of help you determine that, and then the artist included, right? Like looking at their socials, looking at Chartmetric, the various tertiary information sources to kind of get a full picture. Those are the best ways to protect. But you know, it's an investment, so there's inherently risk with any of these. It's always a possibility that cash flow can drop off and stuff like that.
Also knowing where an asset sits on its tail.
Yeah.
So, you know, if a song had just come out, you know, a year ago and it is showing a ton of radio and streaming pop and hasn't yet settled into to its baseline, you know, just really kind of understanding how royalty assets work is the risk protection there.
Yeah, Eric, you'll want to specifically read about the dollar age. That's kind of like our consistency metric to what Rob was talking about. That helps you conceptualize where along its earnings life a catalog may be. So the higher the dollar age, the further into its tail of earnings, which is the consistent part that the catalog will be, and that can help you measure volatility. So take a look at that. If you are having trouble finding the dollar age articles, which has a lot more information, let me know and I can send it to you. So we've got stuff for you. Corey, normally when we see a formalization of the informal market, bringing capital and efficiency transparency, we see valuations move from 3 to 5x cash flow, 7 to 10x cash flow. Are you seeing this type of demand from sellers? Yes. I mean, if you look at royalty exchange transactions from 5 years ago, they were probably in that 3 to 5x, and we're now definitely seeing them in the 7 to 10x. Rob, you could probably speak a bit more clear to that because you've been with royalty exchange longer than me, but historically looking back, yeah, we've seen that kind of an increase.
Yeah, for sure. And the increased transparency and
Yeah.
Knowledge of the platform itself.
Yep.
We've certainly seen that.
Yep. Now, as for demand from sellers, to be entirely honest with you, I think that the demand from sellers is actually even higher from what our historical numbers say. And that's a result of just the music industry as a whole, and also, you know, larger catalog sales like, you know, Bob Dylan, things like that, who'd sell for 20x plus, right? That creates a bit of an inflated value for a lot of artists, wondering why they aren't getting a 20x or something like that. Maybe they spoke to a lawyer who said this is industry standard or something like that. So we actually see even higher demand from sellers. Of course, it depends on the artist, but yeah. So
that's what's great about the marketplace, is it can show everyone
right.
what the actual currently marketplace is currently valuing them.
Yep, exactly. Would you qualify the majors, quote unquote, using it as toe dip or a more full acknowledgement of the valuation transparency argument above?
Yeah, I mean, I think the majors are all in on the future of the music business. So, you know, you see a ton of, I mean, really a lot of these giant deals that you've seen is the major labels buying back the rights that their artists have, or the publishers buying back the publishing rights of their own songwriters. So I think they're heavily invested in all in on these things.
Yep. Question here, is it possible to view a breakdown of the source of streams? For example, 1 million plays on Spotify, 100,000 on YouTube, etc. Yes, you can absolutely see that for a given catalog. We'll provide the raw data file, and normally you can see those kinds of numbers in that raw data file. Might be a little bit tedious to look through it all, but like, yeah, you should be able to see it there. Next one here. Have you seen an inflection in multiples due to interest rate increases, or is there more of a structural change happening here that offsets? This is a great question. It's something we've been watching pretty closely as far as multiples transacting in royalty exchange compared to macro changes. I'm not sure if we've noticed any changes quite yet. It's still kind of early for us to tell. I don't know, Rob, Dayton, do you guys have any thoughts on that? I've been looking at it pretty closely. Things seem to be pretty consistent, but again, it's a pretty small data pool to go off of, so it's hard to say.
Yeah, you would know better than I.
Yeah, I'm not sure yet, Corey. It's something we're still watching, especially as, you know, Fed interest rates keep going up and things keep happening in the world. So we're watching it closely, and we'll see. Thanks for your earlier answers. Who are your biggest competitors, and how big is your team? I'm not sure who our biggest competitor is. Maybe A-Note. They're based in Netherlands, I believe. But again, they do a securitized asset sale. They don't work the same way as royalty exchange. There really isn't any other market that is a true one-to-one royalty transaction market like us, to my knowledge. All the ones that I've seen have either been an NFT market or a securitized share of a larger royalty generation point. And those tend to have a lot lower returns and multiples. They'll have a lower price too, but you know, that's kind of the price that you get. Our team is 30 people, something like that. I'd have to go talk to HR and get the full count, but something like that, 20 and 30. Okay, and that's the last live one. We can go back to our submitted questions. We got a handful more to get through here. Next one we have is, can a purchase be part of a retirement account? Yes, it can. We have plenty of investors who buy through an IRA. If you do want to do that, it does have to be a self-directed IRA. And you need to get letters of pre-approval because our payment timelines are pretty quick. You do have 2 business days to fully fund an asset, and that could sometimes be prohibitive for an IRA, something like that. But you can do it. How safe are royalty investments? Are royalty investments subject to higher tax implications? How safe? That's tough to answer. Like we've said a few times here, with every investment, there's inherently risk. Are they subject to higher tax implications? We can't really answer the tax question. We're not tax advisors. It's illegal for us to do so. I don't know, Rob, do you have anything you want to add to that?
Royalty income is taxed as ordinary income.
Okay, perfect. All right, moving on here. Non-music royalties, will you be offering anything in this area in the future? Yes, and we do already. Note the Cherry Garcia that we've sold in the past, Listerine. We do film and television residual earnings from time to time, book publishing, things like that. Another submitted one here from Corey. I've been arguing to myself that the assets were mispriced going into rate hikes and are getting streaming sub growth. Monetization through the CRB and streaming subscription price hikes and at 7 to 10x cash flow with a 70-year life are valued okay at 5% interest rate environment. Crazy question mark? Not really sure how to answer that.
I think it depends on the asset, and it's your judgment of that particular asset.
Yeah, I would say 7 to 10x cash flow on a life asset, assuming it's got a solid dollar age. It's not crazy. I mean, just look at the example that we saw for this analysis, which had a near 12x, and already, is trending way higher than the data that was available at the time of purchase. I mean, rate increases aside, it was up maybe like 10 or 15% from the original LTM. But yeah, like Dayton said, it really depends on the asset. Can never get Goldman to comment on stocks either. No surprise there.
Thanks, Corey.
Yeah, thanks, Corey. If you have any other questions or things occur to you, shoot me an email. We can always get you answers. We're going to keep running through these submitted questions here. What does LTM mean? LTM refers to last 12 months. It's how we address the prior year's earnings, which seem to be the most relevant for catalog and forecasting moving forward. So LTM just means last 12 months. If for some reason Royalty Exchange goes bankrupt, let's hope not. What happens to my royalties? Will I lose everything? No, they do not. Your transaction is a one-to-one transaction between you and the seller. Royalty Exchange is not a party to your agreement. So your royalty share that you purchased, that transaction remains intact. We simply act as the admin. So we'd have to set you up with a new administrator in the event that we are no longer able to act as that administrator. But your asset is safe. It's still yours. It's still legitimate, aside from what happens to Royalty Exchange. So you will not lose everything. In fact, you will not lose anything except for a free admin from Royalty Exchange. Next one here. Do you need a placement service to market the purchase? No, these are passive. You do not need a placement service. In fact, you could not get one if you wanted to, because you do not own the copyrights. A few more submitted questions here. Is there a way to buy fractional shares of a given asset? Good question. On Royalty Exchange, the only way to do that is through our private syndicates, which are pretty rare. And those are securities. We do securitize those and sell shares in the SPV. So those are fractional. But on Royalty Exchange, generally, no. It's a one-to-one transaction. You must pay the full purchase price or full listed price or whatever that gets agreed upon for an asset. If we were to fractionalize these, then we would get into securitization, since we'd be splitting it up into pieces. So not on Royalty Exchange, aside from the private syndicates. Next one here. Where will the royalties be distributed for investors? Through our admin portal. If you've never bought before, we have an admin partner through Payment Hub. The company is called Exactuals, I believe. So as part of the closing process, you get an invitation to set up there. You provide your banking information in there, and that's where we provide you payments, statements, things like that. Next question here. In most cases, we see that the seller has a buyback option during the 1.5 years. So in a sense, there is a cap for the first 1.5 years. This is actually inaccurate. Occasionally, you may find a buyback clause, but the vast majority of listings do not have a buyback. We phased those out of our contracts in 2018. So there still may be a few rare cases, but largely any ones that did exist have expired, and we don't include them by default anymore.
And if there is a buyback, it's for 150% of what the investor purchased it for.
Right.
So
yeah, so it's not the worst thing. You know, walk away handsomely. But yeah, pretty rare that we see buybacks. How do I pay taxes if I even have to pay any? We're not tax advisors. We cannot provide you tax advice, but you do have to pay taxes on income. So talk to your tax advisor.
You'll get a 1099
Yep,
if
I
you
was
put
about
it on
to
a
say.
1099 MISC for royalty income.
Perfect. Next one here. Thank you for your time. What's the biggest piece of advice you have for new royalty investors? Read all the literature we send you. We send a ton of detailed guides and walkthroughs on the market, on royalty types. Read it all. Having an understanding of what you're investing in is paramount, especially for a new, oh, I shouldn't say new, but a relatively less known asset class like music royalties. Read our literature, read what we send you. It will help a ton. 1, what happens after 10-year runs out? 2, what are the net returns? So for the second half of this question, we can't speak to returns. We don't know. It depends on the catalog, depends on the price paid, depends on a lot of different factors. What happens after 10-year runs out? We addressed this earlier. When a term ends, those rights revert back to the original seller. So that's it. The cash flow stops. What royalty percentages can be purchased when auctions open? What is the average price per royalty percentage in an open auction? So again, assets must be purchased in their entirety. And then as far as price, I'm not sure that we could give an average price. I think our rough median is around 90K for a catalog, something like that. So that's what we go with.
Yeah, but so much of that is dependent on the LTM and the dollar age.
Yeah,
right? So
absolutely.
if you're talking about an average of all assets on the platform, it's one thing. But if you're talking about an average of, you know, something that's 1 year, 2 years old, 10-year versus life rights term, it's going to vary significantly.
Yep. Yeah. In fact, we recently did a all access analysis on that and the different closing multiples. Is there a space for movie scores? Yes, we've done many. Note the Shrek movie scores, which did really well and continue to earn well. Those are good assets. Does a 12-month return increase if the songs spike and plays again? For example, TikTok. Great question, particularly for the CRB. Yes, it does. TikTok will generate royalties. So if something's getting viral on TikTok, it will absolutely translate to your royalty payments. Not to mention the inherent discovery that happens when people hear a new song through things like TikTok. So nothing but good stuff if that were to happen for a catalog you own. Now, as far as valuations go, it's, you know, something to take with a grain of salt as far as understanding the consistent cash flow, but we view it like a sync placement. It's just good upside, good exposure for the catalog, and more royalties. Does Royalty Exchange have a goal of going public? This can materially change awareness to market leaders in a space garnering a ton of attention from investors. Hypnosis, BlackRock, hedge funds, top artist catalog sellers would help long tail of streamed artists capture value for themselves. Another great question, Corey. We talk about it, but to my knowledge, there's no goal of going public. Gary is on the call who could speak better to that. Not sure that he will. Rob, I don't know if you can speak to that. I am not aware of a goal to go public.
No plans.
No plans. There you go. Next one here, TikTok pays what type of royalty, understanding that it may also help all types of plays. Great question. Rob, do you happen to know technically what royalties TikTok pays? I believe it's performance. I believe they also pay mechanicals. I'd have to go back and look at this exact source allocation for it, but I believe that's it.
Yeah, that they're, I mean, they're supposed to pay
Right.
mechanicals. They're supposed to pay public performance. They pay for the rights to use the sound recording as well on the label side. You know, they're using all of that type of music. I think there's some contention at the moment on if they are paying everything they're supposed to be paying. But they're definitely using copyrighted works.
Yeah.
Required to pay royalties for it.
I don't believe there's any sync royalties paid from that, correct? Which is a little bit unusual, but.
Well, there's not a sync fee associated with the TikTok placement, right? Because the TikTok like video user is not paying the artist to have their song placed in their particular video.
Right. If you are looking for an example, we actually have the listing up right now. The Nasty Freestyle T Wayne royalties. I believe that has some TikTok contributions. So you can take a look at that raw data, and that should be able to paint a nice picture for you. The one here, the faster you grow, investor base, individual small funds, the more artists come to you and the higher valuations go up. Listing would help materially accelerate the business before competitors have a chance to come after you. This is from Corey in reference to going public. This is one of the discussion points whenever we talk about the public aspect and what's right for the business, good for the business, you know, scaling responsibly, things like that. Yeah, so I mean, it's something we regularly talk about. But yeah, still no plans as of now. But we'll see how things change in, you know, coming years. So never know. I want to keep getting through these questions here. We're about halfway. Which royalties are a better investment, publisher or songwriter? It's a good question. It really depends on the catalog and the metrics of that catalog. When I had a chance to speak to Gary earlier about this question, he was of the opinion that maybe publisher might be better just because there's more avenues of payment for it. But it really depends on the catalog. It depends on the rights included and depends on what you're looking at. Dayton or Rob, do you guys have an opinion on what's better?
But it all depends on the price, right?
Yeah.
I think, like you said, there's more streams. There's more different avenues, like you said, for payment on a publishing asset. So you're going to get the sync royalties, you're going to get the mechanical royalties, and then you'll also get a piece of the performance. So really, performance is one specific part of an entire composition bundle of royalty rights. So it necessarily excludes a couple pieces, but it really all kind of depends on what the price is that you're paying for it.
Right. Dayton, thoughts?
No, nothing to add.
Okay, great. Next one here, another good question. With the recession coming, are you expecting more royalties to become available for investors? Probably. It's hard to say, but probably. You know, in times of financial trouble, it's for everyone. That includes artists. So, you know, one of the common questions we get is, why would someone want to sell? Well, you know, financial hardships could be a reason to sell an asset. So it's certainly possible, but we don't really know. We'll see what happens. We'll see how things develop and what this recession looks like, but very likely could lead to more catalog sales. Very possible. Next one here, instead of buying royalty with a full amount, can that be amount/fee be split amongst multiple investors who share a divided percentage? Technically, yes, you can own an LLC with a bunch of other people and own royalty assets through that. We don't have a mechanism for that directly on Royalty Exchange, but you can set up something independently and buy that way. So sure, yeah. How long does it take for the asset to show in your account, and when do you start to see royalties? It totally depends on when you purchase. Part of our closing process is reassigning the royalty rights. And that confirmation of assignment can take time. Normally, we know for certain once the next royalty distribution hits is a pretty good metric. And that totally depends on when you buy, whether it's a day, a month, a year, totally depends. Next one here. How lucrative is royalty investments, or is it more of a long-term investment? That depends on your strategy and how you approach this stuff. We see plenty of investors adopting both strategies and with success too. Some people will buy stuff and turn it for a profit 6 months later. Other people have just been accumulating lots of different catalogs to build a diverse portfolio of cash flow. So we see everything. Dayton, were you about to say something there? No, okay. Next one here. After the chosen investment time expires, will I be able to repurchase and renew my ownership? So that's in reference to terms ending. Great question. No. Once a term ends, the decision to resell or continue, that's up to the rights holder and what they want to do. We have had a couple of examples of people who owned 10-year terms extending the term with the seller. So that has happened before, but there is no set opportunity to repurchase or renew. Like I said, that's up to the artist and what they want to do. What are the validity / security measures for royalties from the various reporting entities? Is this in regards to collecting royalties and ensuring that everything is collected? Or is this about, I'm not sure.
Typically, it would be in the form of an audit clause. So
Okay.
a songwriter would be able to audit their publisher.
Great.
A member of a PRO would be able to ask for an audit of their royalties. And I think that's probably what that question was getting at.
Okay, perfect. Awesome. Next one here. How can I get a historical trend of takings for the lifetime? Can I get paid into a non-US bank account? Historical trends, yeah, that's always available on Royalty Exchange. We've got those raw data files, so take a look at that. There's one for every asset. Can I get paid to a non-US account? Yes, you can. We have many international investors. It's no problem. Back to Payment Hub, you just fill out that information in Payment Hub. When purchasing, publishing, or songwriter rights, I assume this covers multiple recordings of the songs listed. Is that correct? That would depend on the rights included, right?
No, for sure. Yeah. So if you own the rights to a musical composition royalty, you get paid for every use of that composition. So the example I use a lot is Bob Dylan wrote All Along the Watchtower. When Bob Dylan's version gets played, you get paid. When Jimi Hendrix version gets played, you get paid. When Dave Matthews version gets played, you get paid, because that all goes back to the underlying musical composition.
Awesome. Next one here. Foot in the door / start making profit is important for a beginning investor. How to find a great first deal for cost and profit? That's the $1 million question, isn't it? How do you value these things for a good deal? For newer investors, like we said earlier, read all the literature. That will help you feel confident in what you're buying. And if you're confident in what you're buying, it's easier to, get started. So read our literature is my answer for that question. Next one here. I would like to update my accountant my holdings. Are they a security or a commodity for tax purposes? I believe we answered this question earlier. What is Gary's favorite flavor of ice cream? Cherry Garcia. He told me without a doubt. So we're going to go with that. What are the opportunities for royalties in Web3 and the metaverse virtual world? Yeah, that's a great question. Dayton, Rob, do you guys have any thoughts on this before I talk about it?
Yeah, I mean, as everything goes digital, there's more and more opportunities for music to be a part of that. I mean, music is ingrained in humanity's just existence, so yeah, you can foresee a situation where there's a virtual concert and millions of people across the world go to a virtual concert in the metaverse.
Yeah,
It's ultimately limitless, but I certainly would think there'd be a ton of music involved in it.
Yeah. When I was
Yeah.
talking to Gary about this question earlier, he said, as more life goes online, more of life will need a soundtrack, which I thought was a very apt way of putting it. Sorry to cut you off there, Dayton.
Oh, I was just going to say, I think that whatever there is a real world, like an IRL music use for, there's going to be a URL music use for. Like we've
Mhm.
already seen the live concerts. Any of those contexts, I think if you can think of something that's happening in real life, there's going to be a Web3 or metaverse analog.
Yeah, definitely. So long story short, our expectation is that there is going to be a ton of applications for music in Web3 and the metaverse, which does translate to royalties. So yeah, that's our expectation. Next one here, can you extend the recent earnings bar chart to the last 10 years? I mean, we could. In our analyses, the last 3 years seem to be the most relevant. You'll notice that for a lot of listings, things will have 3-year average. We'll show the last 3 years of historicals by bar chart. Beyond that, I'm not sure how relevant that might be for, conceptualizing
Yeah.
recent and future earnings. So we'll always have that through the raw data, but as far as a summary analysis of it, maybe. Dayton, what do you think?
Yeah, I mean, to your point, John, I think that it's always great to have more data if more data is available. But a view of 10 years worth of historic distributions, it, in my view, only goes as far as it goes. Because what was 10 years ago? It was 2012. So, where were the DSPs at that point? What was the
Right.
major dominant consumption of music at that point? It was a completely different world in terms of how people were listening to music, how much money was in the music industry, and what that translated into a royalty. So if you're trying to look at the trend of an earnings for an asset from 2010 through 2022, you're going to see some. It's going to look very different, and I don't know how applicable it's going to be in terms of your analysis trying to value this asset today.
Yeah.
But just to be clear, that data is available on every listing. It's just not represented in the actual picture chart.
Right. Exactly.
The raw data file will let you look at every piece of information that we have available.
Right. Another live question here. Can you split assets that have already been purchased to enable sale of a portion of an asset? Another great question. Kind of. So we've already talked about how, splitting up these assets is like securitization. So in many instances, we won't do it, just to make sure that we stay away from any kind of scrutiny like that. That being said, doing things like, say you bought a life of rights term and selling a 10-year interest in that life of rights term, we can do that. We have done a splits in half before, but again, something that we try and avoid.
Well, if you just want to hold half, if you buy an asset, you want to hold half and sell half. There's nothing wrong with that.
Right. Yeah. So if that's something that you wanted to do, approach us about it and be like, hey, this is what I was thinking. We can look at it. We're always happy to take a look at this stuff and service investors the best way that we can. So ask us, and we're happy to take a look and see what we can do. What due diligence does Royalty Exchange do before adding an asset to the marketplace? Love this question. Rob, you want to talk about our due diligence process?
Yeah, for sure. So our process is once a seller contacts us, if they're interested in selling their asset, we really kind of do a couple things. We first make sure that that person is who they say they are. We run a TransUnion check to verify whether they have any liens. So really kind of our due diligence is summed up as we make sure that our seller is who they say they are, that they have the ability to sell their asset free of encumbrances. So we check for any liens. We contact the distributor directly. We get all of the royalty data directly from the distributor. We ask the distributor, is there any liens or encumbrance on the account that would affect them from selling their royalties? So that's kind of our process.
Great. And then another question here, how far in advance do you announce a royalty payment through Payment Hub? I'm not certain. I have to talk to Marissa from our
I don't
admin
think it's in
team.
advance at all. I think
Yeah, I think
they
it's when
send the
it's ready.
statements and the payment out same day.
Yeah. Now, that being said, whenever you buy an asset, you should have a pretty good understanding of the distribution frequency and rough schedule. Most of these companies will actually have their distribution calendar on their site. So like ASCAP has one, BMI will have one, and they're pretty common. But then just looking at the period by period earnings on a listing will show you how frequently it pays out. So you can kind of get an idea from that. Okay, more live question or more submitted questions. When will we have notice when the decisions are made, and will it go forward with the decisions as soon as it's effective for pay? This is in reference to the CRB decisions. When will we have noticed the decisions are made? Great question. You can probably expect there to be a lot of press around any kind of finalized decision like that. But we don't know. We'll have to see. And will it go forward with the decision as soon as it's effective for pay? It's kind of what we've been addressing on the call earlier is we don't know what that will look like. Could be gradual, could be a lump sum. That's all TBD. So we'll let you know when we know. Next question here. When does payout allocation happen? How has the decline in the crypto market impacted the royalty business? So payments happen, as we just said, when distributions happen. But how has the crypto market impacted the royalty business? That's a good question. To my knowledge, it hasn't really, aside from our NFTs, which are purchased using cryptocurrencies. Rob Dayton, do you guys have any thoughts on the crypto market?
I think they have no impact on the royalty business.
Yeah,
I don't think there's really a correlation.
Yeah. Like I said, the only thing is where those two worlds intersect, and that's through our NFTs. But yeah, beyond that, I mean, that's just crypto being crypto. It's not really an impact on the royalty performance. Okay, moving on here. How can you repackage music rights that you own for partial or complete sale? We kind of just talked about that one. Approach us, let us know what you're thinking. Can you please explain how song usage is tracked? For example, song plays on YouTube videos and who is actually tracking the usage? Rob, I think you probably would know that best, right? It's going to be publishers and companies like the MLC and PROs, stuff like that.
Yeah,
right?
I mean, to bring it back to the context of what we've been talking about today is the CRB, and if we're talking about mechanical streaming, then the MLC is they're the ones. I mean, the DSPs ultimately are required to track usage. You know, a lot of that information is public. If you just go to the streaming services, you can see total streams, but there's a ton more granular data that the MLC collects on a monthly basis. So that, I guess, in the context of what we're talking about today, is the MLC is the answer to that question.
Cool. So did you have something you want to say there?
I was just gonna say broadly, it's the rights management organizations, whoever that is, for whatever the right that's implicated, you know, that is working with the licensees for these musics. So the DSPs report the plays to the MLC, or they might report it to ASCAP for the performance side. It's also getting reported to the distributor for the sound recording. And in turn, those rights management orgs are also tracking to make sure that, you know, they're getting what they're expected to get for those particular usages.
Great. Next one here. This is another CRB related question. Most of the royalties sold on the platform are performance royalties. Does the CRB affect those payments or just mechanical? And we kind of touched on this earlier in the call too, in that they are related. But Rob, can you want to just reiterate how those two function together?
Yeah, the CRB rates do not affect performance royalties at all. Those are set separately with different processes. The CRB only has jurisdiction over mechanical royalties.
Right. Cool. And then another related question: layout CRB3 impact on mechanical versus performance. What are the current cap rates looking like on completed trades? So we kind of reviewed that in this presentation. So I would say go back and look at the slides. And that's probably gonna be the best way we can conceptualize the cap rates, it's just through our example and those percentage increases that we're expecting from the streaming mechanical changes. Dayton, you have anything you want to add to that? No. Okay, great. Next question here. What does this mean for those of us who manage our own catalog and what to expect from publishing admin agreements in place? Not sure we can answer that. I guess we'll see.
Well, I think if just to kind of bring it back to the MLC again, is if you are administering your own catalog, you really need to sign up with the MLC.
Yeah.
It's free. They're tracking all these plays. That's how you get paid for these streaming mechanicals. If you don't already have an admin, then you need to be registered with the MLC. So individual songwriters, individual publishers, majors, they all can be members of the MLC and have them collect your royalties for you.
Great. Next question here. What does it mean to be an active owner? This is in reference to the active owner tag that are on some listings. That lets investors know that this is someone who is responding to offers. So there's a lot of listings up. Not all of them are actively for sale, but if you see an active owner, that's someone who is responding. So it can let you know that this is something that actually is for sale. Next question here, CRB3 impacts. I have Sexy Can I by Ray J. Also, what's the impact of analyst benchmark visibility to resale value of catalogs? Great question. I'm sure many of you noticed that the analyst benchmark is now widely viewable by everybody. This is a change in just the last couple of weeks that we've made, so it's too early for us to tell, but we're watching it closely, just like everything else in the market. So we'll let you know as we learn more. Does the royalty exchange platform administer payments directly, or must investors register with PROs separately? We handle all of it, so you don't need to register anywhere else. Could you give us some insights into the regulations surrounding businesses purchasing or investing in royalty rights as assets? I'm not sure that we can. I don't know, Rob, do you have any regulatory knowledge about companies like Hipgnosis and those larger entities?
Yeah, I mean, regulations surrounding businesses purchasing assets. I got nothing.
Yeah, I'm not sure. Where do you see valuations heading in the next 12 months? Have there been signs of valuations dropping? Great question. I imagine this relates to macroeconomic climates. We haven't really seen signs of dropping. Given macroeconomic climates, there is some expectation that they'll go down because everything's going down. But it's hard to say, like these assets are historically pretty uncorrelated to traditional market trends. So we'll see how that holds. It's still kind of early for us to tell. And again, something that we're watching very closely as far as marketplace health goes. But haven't really seen it yet. So we'll see. We'll let you know as we learn more. Next question here. Future outlook on royalty rates on portfolio sales numbers. Well, future outlook on royalty rates is the CRB projections that we've been doing and the 15.35% rate that the various stakeholders have agreed upon. So that's kind of the outlook right now. No, Dayton or Robert, if you guys have anything to add to that.
Well, I think if the rates are going up, you would think that the earnings will go up and then valuations will go up as well. I think.
Yeah. Presumably, yeah. Next question here. What genres of music do you see doing particularly well in terms of growth in 2023 and 2024? Funny question, because our most recent All Access piece was about genre and how genre does not seem to have an impact. So we don't see a particular genre doing well in terms of growth in 2023 and 2024. Genre doesn't seem to have much of an impact at all. Again, this is analysis that we do every year. We constantly are analyzing different specifics and nuances to the royalty business to see if we can divine any insights from that. So yeah, no genre in particular. How do we know what is a good or bad royalty investment? Yeah, again, the $1 million question. All depends on the price you pay and the catalog that you paid for. What due diligence will Royal Exchange do? We did that one. How does Admin MP differ from other music publishers like BMI? Rob, can you tell us about Admin MP and how they're different?
Well, firstly, BMI is a performance rights organization, so they only handle public performance royalties. They're not a publisher. So Admin MP is a publishing administrator. So they'll sign up writers, songwriters who have songwriting credits, and they'll essentially administer their publishing royalties. So they'll be responsible for collecting all the mechanicals and syncs and the publisher's side of public performance. So really kind of a smaller version of a major publisher.
And that's it for the submitted questions. A last one here from Corey. What % of COVID reopened do you think we have seen in public performance royalties thus far? Anything yet? So interestingly enough, another one of our all access pieces was looking at the COVID reopening and how that's impacted royalties, particularly from PROs and public performance. So it's interesting. What we saw in looking at the data that we have on the site, looking at reported numbers from BMI, ASCAP, Live Nation, and various other companies, is that COVID didn't really change the levels of royalty earnings that were happening. Sure, live performances went down because everything was closed, bars, concerts, etc. But the music industry compensated in other ways, mostly through streaming and advents of new music consumption like digital concerts and things like that. The music demand never really went away. It's just the allocation and percentages of the different rights types is what changed. So as far as reopening goes, Live Nation reported record highs for concert sales. I think it was in the last 6 months, right? Dayton, do you remember?
Yeah, at Live Nation, they're back at about their quarterly revenues pre-COVID. So, I mean, that was really the only significant impact that COVID had in terms of royalties was what you had for live performances.
Right.
And that is, I think in the US, it's basically back to where it was pre-COVID. My understanding is that other territories, there is still a gap between what is being paid through today and the pre-COVID. I think mostly in like the APAC territories, Asia Pacific. But aside from that, it had a minimal impact, I think, on most types of music usages.
Yeah. And then the follow-up here, doesn't that imply the bump should still be coming? Maybe. It's kind of hard to tell what the bump will look like or if there will be a bump at all. Just because the royalty payouts were still going, and this is particularly looking at PROs that we're talking about, because that was a lot of the information that we have on hand. So a lot of that performance royalty was still paid out. It's just the source from the performance was a little bit different. There still could be a bump, especially since the live music demand is still very high and there's a lot of hunger there. But
Yeah,
we probably won't see that for another year at least, right?
In terms of like the bump, I think especially for the PROs, live performances are held in arrears a bit longer than most other sources. So I would expect that you would see the 2022 concert revenue be fully realized in 2023 distributions. And by that logic, I think that 2024, assuming that 2023 has fully normalized live performance, would be the first year that you'd see the complete value of those distributions post-COVID.
Yeah, that's probably a safe view, but we'll see. We'll see what it looks like. Yes, that is what I was thinking. It implies there was some really solid structural change going on through COVID. Yeah, and this all relates back to metaverse and Web3 too, right? I know Dayton and I were particularly interested in live digital concerts. I remember reading a headline about Travis Scott doing something in Fortnite that had a ton of viewership. So it's definitely interesting as far as how things are going structurally in the music industry. And we'll see as you know, that whole digital frontier continues to develop. Yeah, we'll see how it goes. Cool. Any last questions from those of you that are still here? I'll give you a minute just to formulate anything. Yeah, thank you, Corey. Really appreciate you taking the time. But yeah, that's all we got for this all access, or not all access, office hours session. Last questions going once, going twice. Let's get this thing public. Let's get it public.
Thanks, Corey.
Eric, we will do these one every quarter. And we're going to start doing them with a bit more depth like these. Historically, these were just Q&A. This is actually the first one we've done with a little bit more of expanded subject matter. So glad to hear that you liked it. We'll be doing more of these. Yeah, so definitely encourage you signing up, and we'll be sending emails about them too when they come up, and the subject matter and what we're going to be talking about, stuff like that. Okay, so thank you all for attending. There will be a replay of this if you want to go back and look at any of our answers or anything like that. Quick recap. My name's John Gestel. I'm our client relations coordinator here. With me, as always, is Dayton O'Connor, our lead analyst, and Rob Bernhardt, our corporate counsel. We do these every quarter. Thanks for attending, and we'll see you guys next time.
Thanks, everybody.